Hello, everyone. I wanted to provide a quick update on where things stand in Sacramento and what the California MBA is currently tracking on your behalf as we move through the legislative season. We're now in our second year of the legislator's 2-year cycle, which means many of the issues we're engaged on last year are continuing to evolve this year. We've now passed the bill introduction deadline, which gives us a clear picture of what lawmakers are considering this year. In total, 1,897 new bills were introduced, on top of many existing bills that carried over from last year. Of note, about one-third of the bills introduced are what we call spot bills. These bills currently contain placeholder language and will be amended with policy proposals in coming weeks. The California MBA will be closely monitoring those amendments as they emerge. At this stage, we are working to identify the top bills of concern for the mortgage industry and determining where we should engage on those bills. One issue that requires our continued attention is mortgage forbearance policy. As you may recall, last year, the California legislature passed AB 238, which created a system allowing borrowers impacted by the Los Angeles wildfires to receive up to 12 months of mortgage forbearance. Now, we're seeing new legislative proposals that could significantly expand those requirements. Two new bills introduced by Assemblymember Harabini raises concern for the industry. The first is AB 1842, the California Emergency Mortgage Relief Act. This bill would require mortgage servicers to offer up to 12 months of forbearance during any state-declared emergency, including 4, 5 to 10 unit properties. And it would allow borrowers to bring civil lawsuits against servicers for alleged violations. The second bill, AB 1847, goes even further. It would extend wildfire-related forbearance for borrowers in Los Angeles to up to 36 months and require servicers to offer deferred repayment to the end of the loan term unless prohibited by the investor. We will work to educate policymakers about the operational challenges these requirements could create for lenders and servicers. At the same time, we are continuing to engage constructively with the governor's office on a potential rebuild fund. The goal of that effort is to help homeowners bridge the gap between insurance payouts and the true cost of reconstruction after the wildfire damages. Mortgage lenders want to be a part of the solution, helping families rebuild while maintaining a stable and workable lending system. Beyond forbearance, several additional bills could impact our industry greatly. One proposal, AB 2145, would allow certain borrowers who have reached retirement age to transfer their existing mortgage interest rate and remaining loan term to a mortgage on a new principal residence. Another bill, AB 1850, addresses real estate wholesaling and could have negative impact for some of our commercial mortgage banking members, depending on how the law is interpreted. We are also monitoring AB 2154, which currently exists as a spot bill, but could restrict the sale of mortgage applicant data to third parties. And in the Senate, SB 880 includes intent language that could lead to legislation placing limits on housing purchases by institutional investors, an issue that Governor Newsom referenced as a priority in his State of the State address. Finally, one of the most significant issues we continue to monitor is AB 801, the proposal to create a California-specific Community Reinvestment Act. While that bill stalled last year, it remains a 2-year bill and could return this year. The California MBA continues to view it as one of the most significant potential threats to the mortgage industry in the state. As always, the California MBA is actively engaged in Sacramento to ensure the mortgage industry's perspective is heard. We'll continue monitoring legislation, working with policymakers, and keeping members informed as these proposals evolve throughout the year. Thank you for your continued engagement and support.